Guess what the hardest part of making money in trading is? It's doing absolutely nothing. Let me explain. You know what separates profitable traders from the 90% who blow their accounts? It's not some secret indicator. It's not some magical strategy that costs $5,000. And it's definitely not trading every single day like you're playing a video game. The real secret? Learning to sit on your hands and wait. Today, I'm going to break down the psychology behind successful trading, why patience is literally your biggest edge, and how to build a system you can actually trust when everyone else is screaming at you to do the opposite. The uncomfortable truth about trading. Let's start with something that nobody wants to hear. Trading is boring. Actually, let me rephrase that. Profitable trading is boring. If your heart is racing every single day, if you're constantly jumping in and out of positions, if you're feeling that adrenaline rush with every candle close, congratulations, you're probably losing money. I know that sounds harsh, but here's the reality. The market doesn't care about your feelings. It doesn't care that you're bored. It doesn't care that you haven't taken a trade in 3 days and you're getting anxious. The market is going to do what the market is going to do, and your job as a trader is to wait for the exact moment when your edge appears. Think about it like this. Imagine you're a lion hunting on the African savanna. Do you think that lion is chasing every single gazelle it sees? No, it's sitting there, conserving energy, watching, waiting for the perfect moment when a weak or isolated target presents itself. And then boom, it strikes with precision. That's trading. You're the lion. The market is the savanna. And those high-probability setups? Those are your isolated gazelles. But here's where most traders mess up. They see other traders posting their wins on social media. They see someone on Twitter bragging about taking 5 trades today. They hop into a Discord server, and everyone's talking about their positions. And suddenly, they feel this overwhelming pressure to be active, to do something, to prove that they're a real trader. The curse of overtrading. Let me tell you a story. When I first started trading, I was that guy. I would wake up at market open, eyes glued to the charts, looking for any excuse to enter a position. I had this belief that more trades equals more money. Makes sense, right? Wrong. Dead wrong. I remember this one week specifically. I took 23 trades. 23. And you know how many of them were actually part of my strategy? Maybe 5. The rest? Pure impulse. I saw a candlestick pattern I kind of recognized. I saw a price bouncing off a level that sort of looked like support. I heard someone in my trading group mention a ticker, so I jumped in. By the end of that week, I was down 18% on my account. But here's the crazy part. Those 5 trades that were actually part of my system, 4 of them were winners. If I had just taken those 5 trades and done nothing else, I would have been up 6% for the week. Instead, my impatience and need to feel productive cost me 24% in potential gains. That's when it hit me. The problem wasn't my strategy. The problem was me, my psychology, my inability to sit still and wait for my edge. Why waiting is your superpower. So let's talk about why waiting is actually the most important skill in trading. And I mean skill because it is something you have to develop. It doesn't come naturally to most people. The market operates in cycles. Trends, consolidations, reversals, expansions, contractions. These cycles play out over and over again. And within these cycles, there are specific moments, specific setups where the probability shifts heavily in your favor. Those moments are rare. They might happen once a day. They might happen once a week. They might not happen at all for your particular strategy. But when they do happen, that's when you strike. That's when you put your capital at risk. Not when you're bored. Not when you feel like you should be doing something. Only when your specific criteria are met. Let me give you a practical example. Let's say your strategy involves trading supply and demand zones. You're looking for specific characteristics. You need a strong impulse move. You need clean price action. You need confirmation that institutions are involved. You need inducement to be cleared. You need structure breaks. You need fair value gaps to align. Now, how often do all of those factors line up perfectly? Not very often. Maybe you get a strong impulse, but there's no clear inducement. Maybe you have perfect zones, but the structure isn't confirming. Maybe everything looks great, but there's a major economic release in 2 hours that could invalidate everything. In all of those scenarios, the answer is the same. Don't trade. Wait. Be patient. Your setup will come. And here's the beautiful part. When you actually wait for your setup, when you only take trades that meet every single one of your criteria, your win rate goes up dramatically. Your risk reward improves. Your drawdowns decrease. And most importantly, your confidence builds. Because now you're not second-guessing yourself. You're not wondering if you should have taken that trade. You're not lying awake at night thinking about all the what-ifs. You took your setup. You followed your rules. And whether it wins or loses, you know you did the right thing. The power of a personal system. This brings me to my next point. You need your own system, not someone else's. Not some strategy you bought from a guru. Not some method you saw in a YouTube video, even this one. Your own system that you've tested, that you understand, and that you trust. Now, I know what you're thinking. But wait, aren't you teaching me a strategy right now? Aren't I supposed to follow what you're saying? Yes and no. I'm giving you concepts. I'm giving you principles. I'm showing you how I think about the market. But your job is to take these ideas, test them yourself, modify them to fit your personality and your risk tolerance, and build something that's uniquely yours. Because here's the thing. When you're trading someone else's system, you don't really understand it. You don't know why it works. You don't know when it's supposed to work and when it's not. And the moment you hit a losing streak, which you will because losing streaks are inevitable in trading, you'll abandon it. You'll think the system is broken. You'll go looking for the next shiny object. But when you're trading your own system, when you've spent hours backtesting it, when you've seen it work and fail hundreds of times, when you understand the logic behind every rule, you have conviction. You have confidence. And when you hit that losing streak, you don't panic. You don't abandon ship. You know it's just part of the process. Let me share another personal story. About 2 years into my trading journey, I thought I had found the Holy Grail. This trader I followed had this elaborate system involving multiple indicators, specific entry conditions, and complex risk management rules. He was posting consistent winners, and I thought, this is it. This is what I've been missing. So I spent 3 months trying to trade his system exactly as he described. And I lost money consistently. Not because the system was bad, but because it didn't fit me. His system required watching the charts for 8 hours a day. It required making quick decisions based on rapid price movements. It required a level of screen time that I just couldn't commit to. More importantly, I didn't understand it. When a trade went against me, I didn't know if I should hold or exit. When I saw a setup that kind of looked right but didn't quite match his examples, I didn't know if I should take it. I was constantly second-guessing myself because I was trying to trade through someone else's eyes instead of my own. So I stopped. I went back to basics. I studied price action. I studied institutional order flow. I studied supply and demand. I studied market structure. And slowly, I built my own approach. It incorporated some of his ideas, sure. It incorporated ideas from dozens of other traders I respected. But it was mine. I understood every piece of it. I knew exactly why I was looking for certain conditions. And most importantly, it fit my lifestyle and my personality. That's when my trading turned around. Not because I found a better strategy, but because I finally had conviction in what I was doing. The danger of external opinions. Now, let's talk about one of the biggest psychological traps in trading. Other people's opinions. Social media has made this problem 10 times worse. You're watching your chart, waiting patiently for your setup. Everything is going according to plan, and then you make the mistake of checking Twitter. Gold is definitely going to 2,000. If you're not shorting the dollar right now, you're missing out. This rally is fake. Market crash incoming. Suddenly, your carefully constructed analysis starts to feel shaky. You start doubting yourself. Wait, should I be in this trade? That guy has 50,000 followers. He probably knows something I don't. Let me be very clear about something. Those people don't know your system. They don't know your analysis. They don't know your risk tolerance. They don't know your account size. They don't know your trading plan. So why would you let their opinion influence your decisions? I learned this lesson the hard way. I had this perfect short setup on euro to US dollar. Everything aligned. Strong supply zone. Clear inducement taken out. Structure break confirmed. Fair value gap filled. I entered my position with a tight stop loss and a beautiful risk-reward ratio of 1 to 4. 2 hours later, I'm checking Twitter while my trade is running. and I see this well-known trader posting about how euro to US dollar is about to explode higher. He's talking about some fundamental catalyst. He's showing his long position. His whole community is piling in on long trades. And I panicked. I closed my short for a small profit, convinced that I had missed something crucial in my analysis. Want to guess what happened next? My original target got hit within 18 hours. I would have made 4 times my risk. Instead, I made 0.3 times my risk because I let someone else's opinion override my own analysis. That was a $2,000 lesson in trusting my system. Here's what I do now. When I'm in a trade, I don't check social media. I don't read market commentary. I don't watch financial news. I look at my chart. I look at my plan. And I execute based on what I decided before I enter the position. That's it. Your system is your compass. Other people's opinions are just noise. And in trading, noise is deadly. Building unshakable confidence. So how do you build the kind of confidence that allows you to wait patiently and trust your system when everyone else is doing something different? The answer is backtesting and forward testing. There's no shortcut here. You need to prove to yourself with data that your system works. Not just for 10 trades, not just for one good week. You need hundreds of examples. You need to see your system work in trending markets and choppy markets. You need to see it work and fail so many times that there are no surprises anymore. When I say I've backtested my strategy thousands of times, I'm not exaggerating. I went back years on multiple pairs and multiple time frames. I marked out every single setup that met my criteria. I recorded the results. I calculated my win rate, my average winner, my average loser, my maximum drawdown, my profit factor. And you know what I found? My system works. Not every time. It never works every time. But over a large enough sample size, it produces consistent profits. And truly knowing that with certainty, changes everything. Now, when I take a loss, I don't spiral into self-doubt. I don't wonder if my system is broken. I know that losses are part of the game. I've seen in my backtest data. I've seen losing streaks of 5, 6, even 7 trades in a row. And I've seen that after those losing streaks, the system always comes back because the edge is real. This is the confidence you need to be a successful trader. Not arrogance, not blind faith, but data-driven confidence based on rigorous testing. The psychology of waiting. Let's dig deeper into the actual psychology of waiting, because this is where most traders struggle. We live in a world of instant gratification. You want food? Order it on your phone. It arrives in 30 minutes. You want entertainment? Netflix, YouTube, TikTok, instant access to unlimited content. You want to talk to someone? Send them a message. They respond in seconds. Trading doesn't work like that. The market doesn't care about your schedule. It doesn't care that you've been sitting at your computer for 3 hours and you're itching to press a button. The market is going to do what it does when it does it. So you have to retrain your brain. You have to learn to find satisfaction not in the action of trading, but in the discipline of waiting. This is a complete mindset shift. Here's a practical exercise that helped me. I started treating my trading time differently. Instead of sitting at my charts all day, desperately looking for trades, I would check my charts at specific times. Once in the morning, once midday, once in the evening. During those check-ins, I would mark any potential setups developing. I would set alerts, and then I would walk away. I filled the rest of my time with other things. Working out, reading, building other skills, living my life. And you know what happened? My trading improved dramatically because I was no longer forcing trades out of boredom. I was only taking the trades that actually met my criteria. Another technique is reframing how you think about waiting. Most traders see waiting as doing nothing, as being unproductive. But waiting is productive. Waiting is you executing your strategy perfectly. Waiting is you protecting your capital from low probability trades. Waiting is you demonstrating the discipline that 90% of traders don't have. Think about it this way. If your system has a 60% win rate with a 1-to-2 risk-reward ratio, and your system produces an average of 1 high-quality setup per week, you could theoretically grow your account by 20 to 30% per year just taking 1 trade per week. 1 trade. That's 52 trades per year. But if you get impatient and start taking trades that don't quite meet your criteria, maybe your win rate drops to 45%. Maybe your risk-reward drops to 1 because you're taking worse entries. Now you're taking 200 trades per year, and you're losing money. Fewer, better trades will always outperform more mediocre trades. Always. The role of emotions. Let's talk about emotions because they're unavoidable in trading. Fear, greed, excitement, frustration, boredom. They're all going to show up. The question is, how do you handle them? First, you need to recognize that emotions aren't the enemy. They're information. When you feel anxious about entering a trade, that's your brain telling you something. Maybe the setup isn't quite right. Maybe your position size is too large. Maybe you're not fully confident in your analysis. When you feel excited about a potential trade, that could be a warning sign too. Maybe you're seeing what you want to see rather than what's actually there. Maybe you're chasing. Maybe you're letting greed override your rules. The key is creating space between the emotion and the action. You feel something, you acknowledge it, and then you check it against your system. Does this trade meet all of my criteria? Yes or no? If yes, take it regardless of how you feel. If no, don't take it regardless of how you feel. I keep a trading journal, and I don't just record my trades. I record how I felt before I entered, during the trade, and after it closed. This has been incredibly valuable because I've identified my emotional patterns. I know that I tend to get overconfident after 3 winning trades in a row. That's when I'm most likely to overtrade or increase my risk too much. So now, when I hit 3 winners in a row, I have a rule. I take a 24-hour break. I literally force myself to step away from the charts. That simple rule has saved me from countless stupid mistakes. I also know that I get frustrated after 2 losses in a row. I want revenge on the market. I want to get my money back immediately. So I have another rule. After 2 losses, I can't trade for at least 12 hours. I have to review both trades, make sure I follow my rules, and only then can I look for the next setup. These rules aren't part of my trading strategy. They're part of my psychological strategy, and they're just as important. The compound effect of patience. Here's something that really shifted my perspective. Trading isn't a sprint. It's not even a marathon. It's a lifelong journey. When you understand that, when you truly internalize it, patience becomes easier. You're not trying to make $1 million this month. You're trying to build a sustainable edge that compounds over years. And compound growth requires consistency. It requires avoiding the big blow-ups. It requires steady, disciplined execution of your edge. Let's do some simple math. If you start with a $10,000 account and you make an average of 3% per month through patient, disciplined trading, after 1 year you have $14,257. Not exciting, right? But stay with me. After 2 years, you have $20,327. After 3 years, $28,983. After 5 years, $58,916. After 10 years, $347,109. From $10,000 to $347,109, just by being patient and consistent. But here's what happens to the impatient trader. They start with $10,000. They have a great month and make 15%. They're up to $11,500. They feel like a genius. They increase their risk. They start taking more trades. Next month, they lose 20%. Now, they're at $9,200. They panic. They try to win it back. They blow up their account. They start over with another $10,000. Same cycle repeats. 5 years later, they've deposited $50,000 into their trading account, and they have nothing to show for it. The patient trader turned $10,000 into $58,916. The impatient trader burned through $50,000 and quit. That's the difference patience makes. Dealing with FOMO, fear of missing out. This is probably the #1 psychological killer in trading. You see a big move happening and you think, I should be in this. Everyone else is making money. I'm missing out. Let me tell you something crucial. There will always be another trade. Always. The market isn't going anywhere. It's been around for centuries and it'll be around long after you're gone. Missing one move doesn't matter. Protecting your capital and waiting for your edge does matter. I've learned to completely reframe how I think about missed opportunities. When I see a big move that I wasn't in, instead of feeling bad, I celebrate. Because that means I had the discipline not to chase. That means I stuck to my rules. That means I'm being a professional trader rather than a gambler. And here's the ironic thing. When you stop chasing every move, when you stop experiencing FOMO, you actually catch more of the right moves. Because you're patient. You're waiting for your setup. And when your setup appears, you're ready. You're not already in 5 other positions that don't quite meet your criteria. You're not emotionally drained from chasing the previous move. You're fresh, focused, and ready to execute. The importance of routine. One of the best things I ever did for my trading psychology was establishing a routine. Not a trading routine, but a life routine that supports my trading. I wake up at the same time every day. I exercise. I have a healthy breakfast. I spend 30 minutes reviewing my trading plan and marking up my charts. Then I set alerts and I walk away. I come back for my scheduled check-ins. I journal about my trades. I have a cutoff time where I stop looking at charts for the day. This routine does 2 things. First, it removes decision fatigue. I'm not constantly deciding when to check charts or when to trade. It's all predetermined. Second, it keeps trading in its proper place in my life. Trading is important, but it's not everything. I have relationships, hobbies, health, and personal growth. When trading is balanced with the rest of life, the pressure decreases. And when pressure decreases, performance increases. Learning from losses. Let's talk about losses because they're inevitable. You're going to lose trades. Your system, no matter how good, is going to fail sometimes. The question isn't whether you'll have losing trades. The question is how you respond to them. A professional trader views losses as the cost of doing business. Just like a restaurant owner accepts that some ingredients will go bad, or a retailer accepts that some products will get returned, a trader accepts that some trades will lose. But here's what separates the pros from the amateurs. Pros learn from every loss. Not in an emotional way where they tear apart their whole system, but in an analytical way where they ask, did I follow my rules? Did I execute properly? Is there anything I can improve? If you followed your rules perfectly and the trade still lost, that's just probability playing out. Nothing to change. If you didn't follow your rules, that's the real problem. Not the loss itself, but the discipline breakdown that led to it. I have a rule. I never change my system based on 1 trade or even 10 trades. I only consider modifications after I've collected significant data suggesting a systematic issue. This prevents me from constantly tweaking my approach based on short-term results. The power of journaling. I mentioned this earlier, but I want to emphasize it. Keep a detailed trading journal. Not just your entry and exit, but everything. Your analysis before the trade. How you felt. Why you took the trade. What you were thinking during the trade. How you felt after it closed. Over time, this journal becomes your most valuable asset. You'll see patterns in your behavior. You'll see what conditions lead to your best trades. You'll see what emotional states lead to your worst decisions. I review my journal every Sunday. I look at the past week's trades. I identify what I did well and what I can improve. This weekly review keeps me honest and keeps me improving. The long game. I want to bring this all together by talking about the long game. Most people get into trading thinking they're going to get rich quickly. They see the social media posts. They hear the stories. They think 6 months from now, they'll be retired on a beach somewhere. That's not reality. Reality is that trading is hard. It requires years of learning, practice, and psychological development. But if you're willing to put in that work, if you're willing to be patient, if you're willing to build a system you trust and stick to it when everyone else is doing something different, you can build something incredible. I've been trading for 7 years now. The first 3 years, I barely made any money. I was learning. I was figuring out what worked for me. I was developing my psychological discipline. But those 3 years were necessary. They were my education. They were my tuition to the market. Years 4 and 5, I started becoming consistently profitable. Not rich, but consistent. I was proving to myself that my system worked. I was building my confidence. Years 6 and 7, this is where things really took off. Not because my system changed, but because my psychology was finally where it needed to be. I could sit and wait for days without getting anxious. I could watch other traders making trades and not feel FOMO. I could take a loss and immediately move on without emotional baggage. That's the journey. And if you're in year 1 or 2 right now, struggling with patience, struggling with discipline, struggling with trusting your system, I want you to know that's completely normal. You're not broken. You're not bad at trading. You're just early in the process. Trading is a waiting game. It's a patience game. It's a discipline game. It's not about how many trades you take. It's not about how busy you look. It's not about following what everyone else is doing. It's about having a system you trust, waiting for that system to give you a signal, executing flawlessly when it does, and then waiting again. That's it. That's the whole game. Most traders fail because they can't handle the waiting. They need action. They need stimulation. They need to feel like they're doing something. But that need is what kills their accounts. The traders who succeed are the ones who can sit still, who can watch the market for hours and take 0 trades, who can see everyone else trading and feel no pressure to join them, who can trust their analysis even when 1,000 people on Twitter are saying the opposite. That's the trader I want you to become. That's the trader I'm still working on becoming every single day. Because here's the truth. The market is always going to be there. There will always be another opportunity. But your capital? That's finite. Protect it. Be patient. Wait for your edge. And when it appears, strike with conviction. That's how you win this game. Not by trading more, but by trading better. Not by listening to everyone else, but by trusting your system. Not by chasing every move, but by waiting for the right move. Trading is a waiting game. And if you can master the wait, you can master the market. Now get out there, mark your levels, set your alerts, and practice the art of doing nothing until your moment arrives. Trust your system. Trust your process. And most importantly, trust yourself. The market rewards patience. Be patient.